So in this video, we will look at the breakout of Taj GVK hotels. Sorry, the base analysis of Taj GVK hotels. See, this is an old chart. So as per the SEBI regulations, I cannot show you the latest charts. So we are studying the old bases in this video series. So let us begin. So base quality analysis, we have already done a couple of examples. This is the third example. So is the price above the 50-day? Is the 50-day above the 150-day? And is the 150-day above the 200-day? The answer is yes. So price blue, green, red. The answer is yes. Is the price within 25% of the 52-week high? So this is 2nd May 2024. Then we go to 2nd May 2023. So what's the highest price? This is the highest price. Okay, so that's the 52-week high. And what is the distance between the 52-week high and the current price? 10%. So it is within 25% of the 52-week high. What is the length of the base? How many candles in the base? 46. So I go here, I click on this candle, the candle that completes point number 1. I click here, I bring it to here, latest, that's 46 bars. Okay. 46 candles in the base. How many do we need minimum? We need minimum 10 candles. Points are 8 in the base. So let me draw the base. The base starts from here. 8 points in a base is extremely rare case, rare scenario. That is why I have picked this breakout for you. Let us draw the 8 points in the base. Point 1, point 2, point 3, point 4, point 5, point 6, point 7, point 8, point 9. So basically 9 points in the base. So here I should make that correction. There are 9 points in the base. So point number 7 becomes our buy point. Okay. Is there a falling window? No. So there is no falling window inside the base. There could be a falling window between these two candles, but that seems to be closed here. Okay. So no falling window, good sign. Up till now, everything is fantastic. Where is the buy point? The buy point is in the green zone. So 0.7, which is the high of this candle, that is 388.35. So let's draw that. 388.35. Okay, that's our buy point. It is inside the green zone. The closing price is inside the blue zone. Ideally, we would prefer both the points in the same color. Is there a mother baby candle? Yes. So if you notice these two candles, that's a mother baby candle combination. And the low of this candle is lower than the low of both of these candles. The low of this candle is higher than the low of this candle. Okay. If you check the chart on TradingView, you will understand. So that is why there are 9 points in the base. Otherwise, there would have been 3, 4, 5, 6 points, 6 or 7 points in the base. So you have to be very careful. You have to check the low of 1, 2, 3, these 3 candles. Go on TradingView on your chart on your computer or laptop and check why I say there are 9 points in the base. So it's very minute, but you will become an expert in analyzing the base if you study these charts. Okay, do it on your own. Favorable candles, are there more than 50% favorable candles? Yes. See, there are 46 candles in the base. So what we will do is we'll convert this to bar chart. So have a look at this. Whenever there is a red bar, okay, see, this red bar, low volume, this red bar, low volume, 1, 2, 3, 4, 5, 6, 7, 8, 9, then 10, 11, 12, then 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So there are 22 bars or 22 days inside the base where the stock has closed down compared to previous day, but on low volume. What does that mean? That means institutions are not selling. So out of 46, 22 are in our favor. Plus, add to that these two candles. See, these two are green candles. Green means higher closing compared to the previous day closing, right? Remember, don't confuse this with strong and weak closing. I'm here talking about up and down closing. Okay, strong and weak closing is different concept. Up and down closing is different concept. Okay, have a look at these two candles. These are up closings on high volume. So up closing on high volume means institutions are buying. Okay, down closings on low volume means institutions are not selling. Correct. So another two, that means 24 candles are in our favor, right? So out of 46, 24 are in our favor. So more than 50% candles are favorable for us inside the base. Is there a shakeout inside the base? Of course, there is a shakeout. Yeah. See, the price starts to fall from here, reaches here, and then this low is undercut by this red candle. Usually in a shakeout, the volume of the candle that breaks that previous low is low. If you notice that, check the previous two videos also. Okay. Then grade. What is the grade of the base? The height of the base. It is C. So I will check the distance between the high and the low here. That's 28.37. So the height is between 20 to 30%. That is a C grade base. Remember, when the grade of the base is low, you should demand more points in the base. Right now, in this case, there are 9 points in the base. So even if the base grade is C grade, it is not coming in the top A or B grade, right? Even though the base grade is low, but the fact that the number of points in the base are large, 9 is very unusual, right? That number of points in the base relatively reduces the risk inside the base. So higher the number of points or higher the consolidation inside the base, the better it is. And the risk that is coming from the C grade is compensated by the number of points inside the base. Then green zone closings 5. There are 5 candles that have closed inside the green zone, which is good enough, which means the stock is able to hold inside the green zone for 5 days. Good point. Less than 5% distance to buy point. So from here till here, what's the distance from closing price till yellow line? It's around 3.5%, right? Then upward sloping moving averages, all the three moving averages are sloping up. Now that's the base. In my view, this is a high quality base. Okay, now I have not done liquidity analysis on this. I have not done comparative analysis on this. I have not done fundamental analysis on this. I don't know what was the sales growth and EPS growth for this. I did not check that before making this video, so I cannot discuss it. Maybe in the next example, I will check that number. But this is pure technical analysis. I'm not even checking what is the base count here. Okay, this could be base number 2, base number 5, anything. Okay, I'm purely looking at the quality of the base based on these 14 parameters that I have set. This is pure play technical analysis. This is a very good base. Okay, nice consolidation. Okay, 1, 2, 3, 4, 5, 6. Then 7 point is not in our favor. 7, 8, 9, then 10, 11, 12. Out of 14, 12 are in our favor. So the base grade is not in our favor. We would prefer it to be A or B, but C is also fine. As long as it is the distance is less than 40%, it's okay to have consider that base. Okay, this doesn't mean we reject the stock. Okay, and the closing price preferably should have been in the green zone, but the consolidation, the tightness in the price itself is very impressive in this base. So there is nothing wrong in taking this trade. This is a classic VCP pattern. This is not like low cheat or middle cheat or whatever. This is classic VCP pattern. Okay. Now, as I told you, I have not done liquidity, comparative, fundamental, and market analysis on this stock. I just wanted to show you how a well formed base looks like. Now, the stock did break out, but the breakout did not sustain. I will show you what happened. Okay. So, after 9 points in the base, the probability of a breakout is very high. So see the volume on that breakout day was like 900% or 800% more than the average daily volume. The average daily volume on that day was 437,000 shares traded. So if you look here, 437,000 shares, and on that day, the actual volume was 10 times more. So 4.4 million. That's roughly 900% more than the average daily volume. That's a significant breakout. Okay. Regarding the the buying zone, so this is 388.35. So the buying zone would be 388.35 multiplied by 1.01. So 1% above the yellow line. So 392.23. So 392.23, that would be the buying zone. Okay. Then you draw another line, which is the stop loss, which is 92% of 388.35. So 0.92 multiplied by 388.35, that's 357.28. So 357.28, and the color would be red because that's a stop loss. So that becomes our stop loss. In this case, you could keep point number 8 as your stop loss if you want to keep your overall portfolio risk under control. Okay, so in that case, point number 8 would be your stop loss, or you could take the blue line as your stop loss. Okay, what is the blue line number here? 365.09. If you check here, 365.09. So you could place your hard stop loss there as well. Okay, depends how much risk you want to take overall. Okay. Next, the target's 388.35, then 20% above. So 388.35 multiplied by 1.20, that's 466.02. That's green color, 466.02. So it will look like this. Okay. Then another point we have to draw, another line we have to draw, which is 25% above 388.35. So that would be 388.35 multiplied by 1.25. I have a calculator here, 485.43. 485.43. Green color, yes. So that's the selling range. The red color is the stop loss. The yellow line is the yellow band is the buying zone. If you notice that breakout did not sustain, I will move the, see, it went on and hit the stop loss. So not every breakout will work in your favor. Notice carefully that the stock did not even get out of the green zone. Okay. That point number one, the overhead supply was so overwhelming that it pushed the stock price down. It hit the stop loss in just, say, 5 candles, including the breakout candle. Okay. So you may have 12 majority of the points in your favor. The stock might still hit your stop loss. I don't know the reason why it hit the stop loss. Could be fundamentals, could be market analysis. That is something which I have not done for this video, because my goal was to focus on base quality analysis. I want to give you some good number of examples of base quality analysis so that you become an expert at technical analysis. The game comes down to technical analysis. No matter how great the company is fundamentally, if technically it is poor, okay, then the probability of losing money is always more than the probability of making money. This first condition, this single condition alone, the price above the moving averages, that alone could have saved thousands and thousands of crores of losses for Indian retail investors in the recent market downtrend, if people simply followed stocks which were in this range, they would have avoided a lot of losses. If people simply sold off all the stocks that were trading below the 50-day simple moving average, then their portfolio performance would have been better, or their portfolio performance would not have been worse as it is now. Okay. So, this single criteria, if retail investors in India can understand this one single criteria, that never get involved in a stock where price is not above the blue, green, red. If retail investors in India had understood this, thousands of crores of losses would have been avoided. That's the power of education. This is written by Mark Minervini in his book, but people should care to read why that condition was written there. Past 100 years of stock market history was studied in the US, and they found out that 98% of the leaders of the past 100 years were already in a confirmed stage 2 uptrend before they began their big price up moves. Confirmed stage 2 uptrend means the price above the blue, green, red. So, uh, when you are buying a stock where the price is above the blue, green, red, you are in the 98% club. Okay, I'm not saying there is a 98% probability that it would go up. Okay, don't confuse that. It is, you are going into that 98% club. You are significantly increasing your odds of success. Okay, but as we saw here, not every breakout will go in your favor. So you have to watch out for technical sell signals, on which I will make more videos. I have already made a lot of videos on technical sell signals. I think back in November or December, when the stock breaks out, what to look for. That's another skill that you need to learn. But for now, this base quality analysis we are doing well. If you understand these 14 points, you will become very good at understanding a base. Okay. It doesn't matter whether you buy or you don't buy. What matters is your analysis correct? If your analysis is correct and your stop loss gets hit, there's no problem with that. Okay. It happens with professionals. But if your analysis is wrong and your stop loss doesn't get hit and the stock continues to go up, that's a problem, because then you will be under an illusion that you are an intelligent person. Okay. No, intelligence has got nothing to do with the uh, stock market or base quality analysis. This is about patience and discipline. This is not about intelligence. What intelligence you need to verify all these? This is a checklist, right? You don't need too much intelligence to verify this checklist on a given base. It's very simple. I can't make it more simple than this. Okay. Thank you so much.